Gold has recovered slightly from its lows last week, but still remains under the 1,200 an ounce resistance level. So can it break through anytime soon? Joining me today is Frank Holmes, CEO of U.S. Global Investors. Frank, good to see you again.
Good to be back.
So last time you were on the show, which was last week, you said that the math is in gold's favor to rebound. The question is when and what would it take?
Well, it's a great question, and I think we could probably expect something out of Jackson Hole this weekend. And I'll give you some more color to it. Many of the major brokerage firms are noting that this has not been such a suppression of the price of gold in the futures market, going back to April of 2001. I mean, this is a 17-year lull between this major pounding of gold prices. But on top of that, Grunlock comes out and he says that there's a huge bet that rates are going to continue to rise. And that's a crowded space also. So we see a big futures bet where leverage is 10 and 20 to 1, betting that bonds are going to fall further, gold's going to fall further, and the U.S. dollar is going to explode. And when that's a crowded bet, and when we have gold over a 12-month rolling for 15 years down one standard deviation, the odds are even greater that we get a big rally.
All right. Well, let's focus in a little more on the Fed's meeting at Jackson Hole, which is obviously the huge news this week. Looking at the U.S., strong economy, strong dollar, it's causing havoc for commodities, for a lot of countries around the world. So, Frank, do you think this might cause the Fed to change course?
Well, I think there are some really good comments that came out, in particular when we see consumer sentiment all of a sudden turn negative over trade war. And we're seeing the Fed in Atlanta comment that many of the major corporations are reassessing CapEx spending. And that's what's important for a durable spend. We need to have big CapEx spending to sustain this economy and higher paying jobs. And that's being cut back. So I think that we could get a surprise that they're not going to raise rates past September. And if that happens, or they say they're not going to raise rates in September, then we'll have a massive bond rally. Yields will fall, and gold will tack on $100. I mean, that's what the potential backup is taking place right now.
Wow, 100.
The other thing is the Toll Brothers, the high-end real estate, home construction, home builders. And they say their average home is $900,000 that they're building. Guess what? That's inflationary.
Frank, let me ask you, if we were to see a $100 move in gold to the upside, you're not saying this would happen overnight per se.
No, but I think we could get a week of this massive surge because the short covering is significant. It's not just gold being depressed; it's also the bond market, and I think that's another key factor here.
All right. So you're saying when it happens, it could just happen in a blink of an eye.
In a blink of the eye.
Frank Holmes.
And if you're not wrong, you'll be wrong.
Frank Holmes, always good speaking with you. Thank you so much, and thanks for watching. We'll be back tomorrow.